Hello traders, and welcome back to Explain the Charts. Today is Tuesday, October 21st, 2025, and we are doing an in-depth analysis of XAUUSD, or gold. There is a ton of action to cover, with conflicting fundamental news and dramatic price swings. First, let's get caught up on the headlines driving the market. Gold has been in the spotlight after a parabolic rally saw it hit a new record high above $4,370 just last Friday. However, that peak was followed by a sharp pullback, with some analysts calling it a dramatic closing price reversal top. The initial reasons cited for this sell-off were a firmer US dollar and a more conciliatory tone from the US regarding trade tariffs on China, which eased some geopolitical tension. Despite that short-term weakness, the longer-term bullish case for gold has been supported by massive central bank purchases, strong ETF inflows, and broad expectations of Fed rate cuts later this year. Now, fast forward to today, and the news is even more dramatic. Reports from FX Street this morning describe a sharp U-turn, with gold dropping towards multi-day lows in the sub-$4,100 region, touching as low as $4,080. This is being attributed to renewed US dollar strength and significant profit-taking after the recent highs. So we have a very interesting conflict, a powerful long-term uptrend, a failed reversal attempt yesterday, and now reports of a massive sell-off today. Let's jump into the charts to make sense of this, starting with the big picture on the daily chart. As you can see, the overall trend since last year has been incredibly strong, with price making a series of higher highs and higher lows. This massive run-up culminated last week in a huge push to new all-time highs. Let's focus in on the last few days of price action, because this is where the story gets fascinating. Here on Friday, October 17th, we see the reversal top the news was talking about. The price rocketed to a high of $4,378, but was aggressively sold off, closing all the way down at $4,247. That long upper wick is a classic sign of selling pressure, and it looked very bearish at Friday's close. A break of that day's low, around $4,185, would have been a strong confirmation of a deeper correction. However, the market had other plans on Monday, October 20th. Instead of continuing down, buyers stepped in with immense force. The price not only recovered all of Friday's losses, but pushed to a new all-time high of $4,381 before closing very strong near $4,360. This daily candle on Monday completely invalidated the bearish signal from Friday, suggesting the bulls were still firmly in control. Based on yesterday's close, everything looked poised for a breakout to the upside. This makes today's reported news of a plunge to $4,080 a massive shock to the bullish structure. It implies either a huge gap down at the open or one of the most aggressive single-day sell-offs we have seen all year. This turns our attention back to Friday's low of $4,185 as a now critical level. Since today's price has reportedly already crashed through that level, it has now flipped from key support to potential resistance. The next major structural support on this daily chart is the swing bottom area from early October, right around $3,944. To get a better feel for this volatility, let's drill down to the 15-minute chart, looking first at Friday's dramatic session. You can see the push to the highs in the first half of the day, followed by an aggressive and sustained sell-off that began around 1300 hours Universal Time Coordinated. The price cascaded downwards for several hours, finding a bottom late in the US session. It was a clear win for the bears heading into the weekend. Now let's switch to the 15-minute chart for Monday. After a quiet opening, the buying pressure began to build steadily. You can see the methodical climb throughout the London and US sessions, breaking through resistance levels. The real fireworks happened around 1900 hours Universal Time Coordinated, with a powerful surge that broke Friday's high and printed the new record. The market closed just off those highs, painting a picture of extreme bullish strength. This intraday trend completely reversed the bearish sentiment from Friday. It shows just how quickly momentum can shift and why single candle patterns on daily charts need confirmation. The close on Monday set the stage for what should have been a bullish continuation. So let's bring it all together, returning to our daily chart. We are in a fascinating, high-stakes situation. The chart data up to yesterday's close screams bullish, but the real-time news today screams bearish. This means extreme caution is warranted. Let's outline the scenarios. For the bears, the case is strong right now based on today's reported price action. The plunge to the $4,100 area validates Friday's reversal top and shows that the bullish recovery on Monday was a trap. The immediate focus is on the support levels mentioned in the news, $4,105 and $4,081. If sellers break and hold below $4,080, the next major downside target becomes the swing low around $3,944. For the bulls, the situation is precarious. They need to mount a serious defense right now at these lower levels. The first sign of life would be a recovery back above $4,100. To regain any real control, buyers would need to reclaim the key level of $4,185, which was Friday's low. If they can achieve that, this whole sell-off could be seen as a massive shakeout before the next leg up. However, until that happens, the short-term momentum has clearly shifted in favor of the sellers. So, to recap the most important levels to watch. Your key resistance levels are now the broken support at $4,185, followed by the psychological level of $4,250, and ultimately the all-time high at $4,381. Your key support levels are the immediate zone between $4,080 and $4,105, with the next major support standing down at $3,944. Given the news of today's sharp sell-off, a test of these lower supports seems highly probable in the short term. I would assign a 70% probability that we see a daily close below $4,185 this week, confirming the bearish reversal. For that to be negated, bulls need to engineer a powerful recovery and close back above that same $4,185 level. The key event to watch this week is the U.S. CPI data set for release this Friday. A hotter-than-expected inflation number could strengthen the dollar and put more pressure on gold. Conversely, a soft number could reignite hopes for Fed rate cuts and send gold buyers rushing back in. Always keep an eye on U.S.-China trade headlines as well, as they remain a primary driver of market sentiment. Thanks for watching this analysis on Explain the Charts. Please remember that this is for informational purposes only and is not financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to the channel, and we'll see you in the next one.